the labor crunch situation in East Asia is far worse than it is in the United States. Because while we have millennials, they don't. And they also have something called the one-child policy, which has been gutting the Chinese demographic for 40 years now. And China is now the fastest collapsing demographic in human history. And there is no way the PRC survives the next decade in its current form. They just don't have the tax structure and the labor structure to even try. So this was always going to fail this decade.
That is Peter Zeihan, a geopolitical strategist and the founder of the consulting firm Zeihan on Geopolitics. He is the author of The End of the World is Just the Beginning, Mapping the Collapse of Globalization, 2002, predicting the collapse of the Chinese economy. He believes that China now has the fastest collapsing demographic in human history. Peter's views about China may be right, as some economists have implied that the demographic crisis will result in a labor crisis and shrink China's working force. Remember that the workforce is the strength of the Chinese economy, so what happens when this collapses? Latest news from the Pew Research Centre survey stated that the data from more than 20,000 respondents in his 19 advanced economies revealed highly critical views of China on a range of issues, but also a shared view that China's influence is growing. Welcome to Savvy Economists and the Sad Tale of China's Crisis. Here is how Peter Zeihan predicted in Underlying Matters about the Chinese economy, giving quick warnings which, if taken seriously, would have averted most of the confusing and depressing situations crumbling the economy today. Please watch, like, and share this video. Drop your comments and observations below and subscribe to the channel for more videos like this. Let's dive right in. China is undergoing a tough time, which is a grave threat to its economy, thus forcing the country to the state of economical distrust. Some of the problems include continued dependence on imports of food, energy, and raw materials, huge debt burden, among others. China's population began to decline in 2009, and it is forecasted that India's population will surpass China's in 2023. The country is currently being affected by numerous economic challenges. Growth is stagnant, housing market is slumping, youth unemployment level is on a high, and the supply chain of businesses is facing problems. The world's second largest economy is walking into a horrible crisis, and no one seems to be doing anything about it. China is suffering from a serious drought, its real estate sector is suffering from the decision of footing serious debt, and the situation is worsened by the Beijing adherence to zero-COVID policy. In the past 2 weeks, about 8 megacities have gone into a partial or full lockdown, cities whose transport and manufacturing centers are home to over 127 million people. About 74 cities have been affected since August, affecting more than 313 million residents. These cities also cover about 35% of China's GDP. But for Chinese President Xi Jinping, this doesn't mean a lot, as he seeks to maintain legitimacy more than ever. We doubt if it has nothing to do with his selection for an unprecedented third term when the Communist Party meets for its most important Congress in a decade next month. Even at that, we don't expect a major shift after the meeting with Party Congress, but some analysts have proposed to see some reduction on certain policies in early 2023 after Xi has secured his political future. But currently, the party may be running short on time in addressing the pressing systems that threaten the country. Also, the weakening demand from the US and European market is also drastically affecting China's economy. The heat is rippling throughout the globe and hurting everything, from automobiles to agriculture and others. Economists have recently warned about the crippling growth of China's economy. Vulnerability at Citigroup indicates that exporters of manufactured goods and services are more at risk in the weak economy. Taiwan and Korea are even in a more sensitive position, as are metal exporters like Chile and Australia. Of course, key trading partners like Germany are also in that category. But the problem consumers will be interested in solving in this charade is whether the manufacturers will be willing to absorb the high cost or will pass it down. We see this like another stagflationary shock for manufacturing companies in China and the world. The prices have skyrocketed abroad, and this is as a result of China's involvement in global supply chains. China's walking into crisis is increasing every day, as recent data reveals that the GDP expanded by just 0.4% in the second quarter of the year compared to the previous year, and slows down sharply from a growth of 4.8% in the first quarter. The cut down on China's GDP forecasts was also projected by 2 investment banks. Last May, these had already cut their China GDP forecasts even further based on the continuing cost of government-imposed COVID controls. The deepening property market downturn is another major drag. The sector, which accounts for as much as 30% of China's GDP, has been crippled by a government campaign since 2020 to rein in reckless borrowing and curb speculative trading. Property prices have been falling, as have sales of new homes. It is evident that China's strictest pandemic protocols have perpetuated a dire economic fallout. Even JP Morgan reduced its projected growth rate from 4.3% to 3.7%, while UBS cut its forecast even further to 3%, down from 4.2%. Meanwhile, the official PRC target for 2022 remains 5.5% growth, as per the media portal. Not only is the extreme electricity shortage in the world's largest exporter set to hurt its own growth, the knock-on impact to supply chains could cripple a global economy struggling to emerge from the pandemic. According to last week's official and private sector survey, China's manufacturing industry contracted for the first time after 3 months in August. Growth in service also slowed. The Chinese shipping industry is also facing congested supply lines, causing a delay in delivery of clothes and toys for the year-end holiday. The hike is because of an electrical shortage. If electricity shortage and production cuts linger, it may lead to global supply problems, thus affecting the production of export products. The food supply rate is also low, which is in line with Peter Zeihan's speech when he said, "China just started its harvesting seasons, and the energy crisis makes the harvest season difficult." Coupled with the hike in global food price, worries are now surmounting as China struggles to manage the farming of crops. Several plants have been forced to shut down or reduce output to conserve energy. However, the production industries will face severe challenges than staples like grains and milk. That's because the power cuts will affect the operations of milk machines, and pork suppliers will face pressures from tight supply of cold storage. In trying to salvage the situation, the Chinese are rebuilding a fundamental system that works. The Chinese have removed the phosphate system because they are concerned about food security in their own country. There are already some new facilities coming in to help the Chinese agriculture sector. According to Peter Zeihan, it is already too late for the Northern Hemisphere to start planting. I mean, if you want to apply fertilizers, you should have already done it this year. But fertilizer prices just went high by between 50% and 200%. He added. So what is going to happen with China's food supply? In the United States, they practice something called crop switching. That is choosing output over input. So the farmers plant crops that require less input and more output. This is something China can introduce into their farming system, especially with the hike in fertilizer price. Also, the lack of storage facilities could affect grain stocks. We have about 2 months globally in terms of stocks we've saved up, and half of that is in China. And every time China wanted to tap its grain stock, they discovered it amounted to close to nothing because their storage facilities are awful. This is what has brought the hike in prices of groceries. Yes, Peter was right when he said, part of the reason why we are not panicking right now is because we are eating last year's harvest. Until we start harvesting in the Northern Hemisphere, we are really going to have a good idea. This is no good news as food may become scarce. That's because it appears that in some of the stocks, China doesn't even have storage facilities. They just make a big pile of them on the roads, and half of it rottens in 2 weeks. The job market in China has almost completely crippled in the past few months. The unemployment rate among the age of 16 to 24 has hit an all-time high of 19.9% in July. This is the 4th consecutive month it has broken the record. This means China is currently abhorring about 21 million jobless youth. Let's be clear, that figure doesn't include the unemployed in the rural regions. Beyond the immediate economic indicators, there are also signs that investors, companies, and skilled workers are losing confidence in China. Multinational companies such as Apple have begun moving operations to Southeast Asia, and fresh college and expatriates relocate to other countries. This could have longer-term implications if the trend continues. As a Chinese, what do you think about Peter Zeihan's position on the economy of China? As a non-Chinese, has your view about the country has changed, whether as an investor or consumer? Please drop your thoughts and observations below. As a newly created channel, we need all the help we can get. To support us, please watch, like, and share our videos. You can also subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.